Hi, I'm Brian Resnick.
And I'm Hal Resnick.
Welcome back to the conference room for episode 2 of Real Estate with the Resnicks. So Hal, what the heck is a title company anyway?
Most people just think we sit in a room and sign papers for an hour, but there's a whole lot of work that goes on behind the scenes that happens before you ever see us.
Exactly right. We're essentially the guardians of the title in a real estate transaction. People usually only see the paperwork at the end, but today we're going to reveal some of the hidden processes that happen long before you ever pick up a pen. How does that process start, you may ask? Well, it all starts with a title search.
Yeah, title search. That's exactly what it sounds like. We review the ownership history of a property. Generally, we go 60 years back on a purchase. Commercial would be 100 years back. And we look at each owner, how they own the property, how they transferred the property, any mortgages they had, if they had judicial judgments or liens against them. We check all of those things, and we need to make sure that they're all satisfied and released prior to us having a transaction to be able to ensure for a new buyer that they're not going to get stuck with any bad seller debt issues, problems, concerns. We look for anything that could be problematic, and if we identify something, we have to do what we call resolution to clean up the file to make sure that we can ensure clean title, marketable title, and put the right person in title, whether they have a lender, whether it's cash transaction. It's similar processes because in the end, we need to make sure that the people we are selling, the property that we're selling, we need to make sure that our buyers are going to be the right people in title without any debt prior to them.
Yeah, exactly. There's a lot of work in doing just that piece, but there's so much more. If there's a survey that gets prepared, and not every lender requires a survey anymore, and not everybody wants a survey anymore, but if a survey has been prepared, we will also take a look at that survey, and we'll be looking for any anomalies. We're looking to ensure that the property lines actually connect all the way around. We want to make sure the lot closes, as it's called. We're looking at the boundary lines to see if there's any structures, driveways, fences, anything that may be encroaching on a neighbor's property or vice versa, encroaching on our property. Surveys can also detail recorded easements and building setbacks. If you know what you're looking at, they certainly can provide a lot of information.
And interestingly, for those of our clients who don't buy a survey or pay for a survey, I do have actual software where I can actually plat out a legal description when there's a meets and bounds description. So I'll have people sometimes come to me and say, hey, I need to know if this closes or what this looks like. And what they're asking of me is to look at the legal description if I can and plat it out and see if the legal description matches and closes and if the shape of what I draw is the shape of what the property sees. So just an interesting addition onto what a survey is and how we review and go look at some of that stuff.
Yeah, and when Hal mentioned meets and bounds, that is what is called that is the old descriptions that used to be in our documents. It actually used to say starting at a fence post, starting at a rock, traveling this distance in this direction, and then at the next point, and it could be a rod, it could be a fence, it could just be a point on the earth turning.
A rock.
It could be a rock. It could be a
tree.
Railroad spike. I mean, it could be anything. Turning this direction for this many feet. So that is the original surveying descriptions. Nowadays, modern descriptions are lot 7 on a plat. It's no longer this mishmash of words and degrees and angles and perches and rods and all that stuff.
Not nearly as descriptive as it used to be.
For sure. But the engineers, when they're preparing their boundary surveys and their ALTA surveys of properties, they're still going back to those original calls to make sure that they're drawing the correct property.
Right, agreed. So one of the things that we're doing in our industry that's one of our main tasks is title insurance. And what that means is we're issuing the title insurance policies to ensure a buyer and a lender that there aren't any issues or problems. This is the only insurance that you pay for once and you have forever as an owner. As long as you own the house and don't sell it, as long as you have that house and you've purchased an owner's policy, you have it forever. Because unlike other insurance products, homeowners, car, etc., we're proactive. We look for problems and fix them up front. Unlike other insurance products, which are reactive in nature, we are proactive. We want to fix these problems before they become an issue. You can't fix a car accident before it happens, but we can fix a known title issue, unreleased mortgage, judicial problem, mechanics liens. We want to make sure that's not going to be a problem in the future. In order to protect those future issues, all other insurance premiums are paid regularly for as long as you carry the policy, but title insurance will stay with you forever with a one-time premium. That's not to say there aren't future protections. If a problem arises in the future, you will not have any additional premiums to pay, and you will have attorneys that fight the battle for you to clear your title up.
Now, typically, we don't find many issues, but I would say that when we do find them, there are a handful of common title issues that we're definitely used to seeing. Unreleased prior mortgages is probably number one. It's not that the loan wasn't paid off, but the paperwork was either never recorded or it was recorded in the wrong county. It's possible that a release was never prepared. And this happens for a variety of reasons. In the past, probably 20, 30 years ago, when a loan was paid off, maybe even more than that, when the loan was paid off, the lender would actually mail the release to the homeowner, to the borrower, with instructions on how to record the release and where to record the release. We still find lots of instances of this happening, and shockingly, when we find out that it's happened, we're able to go have a conversation with the homeowner or the borrower, and they're able to find those original releases and the letters. They provide them to us, and we make sure that we take care of the recording to clean that open mortgage. If it's a situation where the release was either never recorded in the wrong county, never prepared, we will work to make sure that that release gets prepared and gets filed correctly in the right place.
Yeah, that winds up with us chasing lenders. Sometimes lenders go out of business and we have to find the subsequent lenders who bought lenders, and it becomes a very interesting process. In addition to that, there's plenty of instances that there's just a recording error, simple misspelling of a name, listing the wrong address. These cause issues. Typically, they can be corrected by a corrective document, corrective deed, or fixing on the next document to be recorded. We do get some underwriting guidance, and we'll generally follow the underwriting guidance to help us with some of these instances. Another type of recording error, if we've seen the documents being recorded in the wrong jurisdiction. Baltimore County instead of Howard County, for instance. Baltimore County instead of Baltimore City. Once we find it in the wrong place, we tend to be able to go get a court-certified copy, and then we can record it in the proper county. The harder part is going to be getting the transfer taxes and documentary stamps paid to the right jurisdiction, because some of these recordable instruments, it isn't just $60 or $115 to record. There's other taxes that are associated with that we have to make sure are applied correctly. The harder part of this issue is getting the transfer taxes and documentary stamps paid to the correct jurisdiction. That sometimes requires them to move money between themselves, which becomes a problem in and of itself.
Those are just a couple of things that we've seen, some recording issues, some flaws potentially in the common title issues. There are handfuls more, and as we go through the series, we can certainly talk more about others and dive into others. But now that we've actually searched the history, we've looked at the survey, we've made sure the lot closes, we've cleaned up all the problems, are we ready to settle?
You might think that, but first we need to prepare a title commitment and send it to the lender, because lenders have their set of underwriters too, so we need to make sure that they're satisfied with what they've seen. The commitment outlines the terms, conditions, and exclusions for issuing a title insurance policy. So, issues with the property, if there's easement,
HOA declarations, condo declarations,
utility easements, builder setbacks. We'll go through all that stuff. So this commitment outlines the terms, conditions, and exclusions for issuing a title insurance policy. We'll talk about everything listed in the title commitment on a future episode.
So along with the title commitment, we also send a preliminary CD. This document breaks down all the charges associated with the transaction, the transfer taxes, the documentary stamps, the sales price, the deposits, all the lender's charges, all of our charges, all of it combined into one document. We also provide we provide a closing protection letter, which is a document that protects the lender in case there is a loss due to the misconduct of a title company. So it's essentially an insurance policy just saying that if the title company has done something wrong, the lender will not be out any money. We will also provide our wire instructions and any other documents the lender may have requested.
We're getting closer, but now the lender needs to finalize their underwriting and issue a clear to close. They also need to send us their final CD, which we in turn need to ensure we agree and match to the penny. Once all that happens, then they'll send us a closing package. We will incorporate our documents with the lender's documents and create a full set of docs that need to be signed at settlement.
And just like that, now we can settle. We will bring together the buyers, the sellers. If they're represented by agents or attorneys, they are, of course, welcome to the table as well. We'll confirm that the buyer's funds, the lender's funds have each been wired to us and that we have the exact amount that we're expecting. And then we'll sign the docs. The best part of closing, in my opinion, is once all those docs are signed, the sellers get to provide those keys to the new homeowner.
Settlement's one of my favorite parts of what I do for a living. I like to meet with the people and get all the documents signed. I do like some of the investigation work. I do like fixing some of the problems, but I really do like the settlement.
Absolutely.
And even though settlement might be done, we still have some work to do on our end. Our files have to be post-closed. All documents need to be scanned and forwarded back to the lender. We need to disperse the file, meaning that we need to send either wires or checks For the items listed on the CD that need to get pulled out to the items to be recorded, typically the deed and deed of trust to ensure they're separated, they get recorded timely in the correct land records.
Yeah, and then once we get through all that, we can now issue those title insurance policies that Hal mentioned before. Yes, I did say policies. There's actually 2 policies that we issue. There's a lender's policy, which protects the bank's investment in the transaction, and the face value of that policy actually decreases as the loan gets paid down.
And we also issue the owner's policy, which protects the buyer's full equity in the property, and included in the enhanced policy are protections including post-closing forgery, encroachments, and building permit violations. The value of the protection also increases over time as the property value increases. This is similar to if you watch late night television and you see a home title trying to sell you a policy to protect your house. This enhanced policy is a similar coverage to that. So I would offer that most people probably have that protection and don't even know it. The clients that wind up going through those other programs probably don't need them because they should already be insured.
Absolutely. Yeah, definitely. If you've worked with either of us or Community Title or any other title company, if you ever have questions about what kind of coverages you have and protections that you have, reach out. Just don't go out there researching and buying other products when you could very easily be already protected.
Agreed.
Something else that most people I don't think realize is that each 1 hour closing takes between 10 and 20 hours of labor. Time spent behind the scenes of every transaction. Some of the smoother closings will take, closer to 10 hours. But when we need to start tracking down releases from banks that went out of business in 1994, you just never know what it's going to take you. I mean, there's definitely times where that investigative work winds up taking 5 or 10 hours alone, and then you have all the other standard processing, the closing and the post-closing. You really never know what you're going to be getting into until you get into it.
And just for understanding, that doesn't change any kind of billing structure on our end. However many hours it takes for us to resolve the issues, generally speaking, we charge the same for every transaction. So, 10, 20, 40 hours doesn't change anything from our perspective as how we bill. It's the same for everything. And speaking of not knowing what you're going to find, let's talk about some red flags that we look for. One we've seen, whether intentionally or accidentally, is what we would call a silent seller. We receive a contract listing one seller, but when we perform our search, we find that there are multiple names entitled to the house. And we don't know if it's a spouse, a sibling, a friend, a family member, a co-signer, somebody they forgot about. I mean, you'd be surprised how often people forget they bought a house with an X years ago and they just decided, they broke up and decided not to change title, or for some reason didn't change title, somebody didn't want to sign, and then they just go list their house without the expectation of having them join in to the transaction because they're part of the title. The next steps we do depend on this information. We need to question the sellers to see who the person is. Are they alive? Are they able to join in on the transaction? Are they in a different country? Are they a different estate? And these are all things that cause headaches and that we have to resolve before we can ensure clear title to a new buyer.
Yeah, and certainly going in to have that conversation and reach out to the sellers to ask them about somebody that they were involved with, if they broke up, rehashing those memories, somebody that's passed away. Yeah. So it's very similar. Similar things that we see with estate sales. The owners have passed away, and one of the kids is trying to sell the house. If there are other siblings, those siblings may also need to sign off, even though they may have had a discussion internally and said, hey, I'll take care of doing all this, don't worry about it. That's not good enough for us. We need to ensure that we've been provided proof of the estate. It needs to list who the personal representative is and that they have the proper authority to act in the interest of that property. If the estate has not been opened, one must be opened through a probate court to legally transfer the ownership, even if there is a valid will. The will dictate who gets the property, but the probate provides the legal authority to transfer the title.
There are definitely times when we have to spend a lot of time with our detective hats on, but all of our effort can be for nothing if the funds don't end up in the right place. So that brings us to our final and probably most dangerous red flag for today, wire fraud. Once upon a time, I taught our CE about wire fraud, and it's a billion-dollar industry. And it's one thing that can quickly turn a celebration into a nightmare. It often starts with an email received by buyers with a subject of updated wire instructions. This is the number one way that people lose their funds in the process. Here at Community Title Network, our instructions are provided through a secure email, and they are the only wire instructions we will send to you. General rule of thumb for any transaction with any company: if you receive wire instructions, find a good number for the company and use that number and call them. Verbally verify everything. Don't use the number that you find in the email Because if someone is manipulating that email, that's one of the things that they're going to change. So talk to your realtor, look at previous emails you've received, compare the phone numbers, go into our website if you have to, ensure the phone number that you have is the right and legitimate phone number. Can't stress enough upon you, whether you work with us or not, please, please, please verify the wire instructions with a phone call. If the email instructs you not to call and just follow the instructions, that's probably the biggest red flag of all, and you should absolutely call immediately.
Yeah, wire fraud is no joke. You said it's a billion-dollar industry. I think it's even more than that.
That was about
And
10
the
years ago when I
likelihood,
was doing the CE, so it probably is more now.
and the likelihood of getting the money back is if you fall for one of these scams gets lesser and lesser every day. Typically, we ask people to send us our wires 24 to 48 hours prior to closing just to ensure that they are received and that we have them and there's no issues. If you send wires a lot earlier than that and you've been a victim of fraud, it could be a week before we find out that it happened. So if you are going to send wires well ahead of time, also reach out and just let us know that wire is incoming so that we can be looking out for it. We wouldn't typically be looking for a wire until the day of closing or maybe the night before. So definitely keep us updated if that's your plan.
Yeah, and one extra step that we've incorporated is for when we're sending sellers their wire, we'll actually call them before the end of the business day as much as we possibly can and confirm they've received that. Generally, after 72 hours, that money has definitely disappeared. So we want to make sure that we start that clock immediately. So as soon as we get notification that wire has left our system, we're trying to follow up with sellers to confirm that they've received it.
Yeah, absolutely. Very scary times.
Yeah, 100%.
So we find these red flags and we deal with these red flags so that you don't have to. Once we clear all these concerns, you're free to focus on the fun part, the house itself. The process is inherently stressful, but we will do everything that we can to ensure that this is a process that is as smooth as possible. That's why we want to do this show. We want everyone to understand the why behind the paperwork. The whole process feels like a lot less like a mystery and a lot more like a plan when you understand it.
Right, exactly. So our goal at Community Title Network is to make sure that by the time you're sitting at your settlement table, all the scary stuff has been handled. You're just there to sign your name, get your keys, and enjoy your home, and maybe get a little, a giggle here, a laugh there during the hour that you're sitting with us.
Yeah, it's not always all business. We do like to have some fun. I'm sure if you talk to 10 different settlement officers or 10 settlements with 10 different people, the explanations are going to be similar, but the process will be a little bit different. Everybody kind of has their built-in jokes at the similar time. So if you've done a closing with me 2 or 3 times, I apologize if I use the same old jokes every time, but it's just my spiel. We've talked a lot today about protecting your home ownership, and next week we're going to talk about the actual structure of that ownership. It's a topic that people often overlook until it's too late.
Right. We're going to take a deep dive into how you own the property. Whether you're buying it with a spouse, a business partner, a friend, the way you hold title changes everything from your taxes to inherits the home. We're going to break down the differences between joint tenants, tenants in common, tenants by the entireties, so you can make the right choice for your future and what just works best for you and who you're buying a house with. And if you're buying a house by yourself, you're going to be sole owner. You don't have a lot of options with that one.
Yeah, unless you're buying it in the name of a company, an LLC, that's a whole nother conversation.
Right.
You definitely don't want to miss that one. Please like and follow, hit subscribe, and leave us a review. It really helps us get this info out to homeowners and professionals.
And if you have any specific questions about a title issue or red flag you're dealing with, reach out to us. Even if you're a listing agent and you don't know that you can immediately send us business, it doesn't matter to us. Just ask us a question. You can find our contact in the show notes or visit us at www.communitytn.com.
Thanks for listening to Real Estate with the Resnicks.
See you next time in the conference room.